And welcome back. Some very interesting trends are happening right now in the US housing market. So for example, mortgage rates have now fallen to nearly a 2-month low. And we're not seeing a seasonal uptick in the number of people listing their houses for sale, which is causing inventory levels to remain at historical lows. So in today's video, I'm going to share exactly what's happening right now in the US housing market regarding prices, housing inventory, and of course, price reductions and much more. Also provide a summary at the end of this video as well, and also provide some kind of predictions of what may lie ahead based on the data we have today. And with that said, I post frequent housing market updates, so if you guys aren't subscribed to the channel just yet, I invite you to do so and join the family. Also, share this video with anyone you feel who may benefit from the data in today's video. Which, by the way, today's video is based on Realtor.com's weekly housing market update, which, just like previous videos, I did not even read. Instead, go to Realtor.com/research/data. It takes you to these weekly updates that they provide here. So I'd love to share. Let's go ahead and dive right in and get nerdy here. So for the week ended April 1st, the most recent week we have available, asking prices in the US only increased by 4.4% compared to the same time frame in 2022. Now, as a note right here, this 4.4% year-over-year increase is noteworthy because this is actually the smallest increase we've seen going back to May 30th of 2020, when obviously back then, that was more impacted by COVID lockdowns than anything else. Also, I looked at the change in asking prices going back to pre-COVID levels back in 2019. So for the week ended March 30th of 2019, asking prices increased by 7.4%, whereas this week, they only increased by 4.4%. Now, there's one more thing I do want to mention regarding asking prices, because asking prices compared to the same time frame 1 year ago have only increased by single digits for the past 16 weeks in a row. All right, here's something else you guys should be aware of as well, because housing inventory, or the number of houses for sale, only increased by 52.6% compared to the same time frame last year. And this is actually a new trend that has been rising over the past month or so, because inventory levels compared to 1 year ago have been decreasing ever since more or less the beginning of February this year. So for example, back in February 4th, the week ended February 4th, inventory levels increased by almost 69%. Now fast forward 2 months, inventory levels only increased by about 53%. So in other words, we have more houses listed for sale right now compared to 2022, but that growth rate has actually been decreasing. In fact, this increase of 53% is actually the smallest increase on a year-over-year basis going back to December last year. Here's another way to look at this. Here's inventory levels according to Research.com. So for the week ended April 1st last year, there was approximately 252,000 houses for sale. Now there's 410,028 for the week ended March 31st. And my nerdy Excel spreadsheet right here, that's an increase of 62% on a year-over-year basis. Last week, it was an increase of 64%. Also, as a note right here, this is also an interesting trend that's happening right now as well regarding inventory levels as well. So as a note, inventory has been on a downward trend since November last year, despite increases on a year-over-year basis. So the amount of houses we have for sale right now is higher than last year as well as 2 years ago, but it has been on a downward trend since November last year. On top of that, housing inventory has been decreasing in the winter months, which is entirely normal. We see that each and every year. However, inventory levels have been flat or actually been decreasing in March, which is completely abnormal. I say this because it's more normal to have inventory increase starting around March every year. But this year, inventory levels are actually going down, which is likely due to a decrease of new listings, which I'll share with you guys here in just a little bit. But first, have a look at this. Again, there's approximately 410,000 houses for sale. 1 year ago, approximately 252,000. And by my dumb math, that's a 62% increase from 1 year ago. Also, inventory levels 2 years ago were around 310,000, less than the 410,000 we have right now. Now, this is where you guys should be paying attention here, because inventory levels right now are much lower compared to 2020, 2019, and of course 2018 as well. So for example, we have approximately 51% fewer houses for sale right now compared to the first week of 2019, which is obviously pre-COVID levels. So my biggest takeaway regarding this stat here regarding inventory levels is that this really shows us how low inventory was back in 2022. Given the fact that inventory has increased by more than 60% using data according to altosresearch.com. But having said that, even though inventory levels grew by over 60%, we're still down by about 51% compared to pre-COVID levels. And part of that reason why we're seeing this lack of houses for sale is because new listings, or in other words, people listing their homes for sale, have been decreasing for quite some time. In fact, for the past 38 consecutive weeks, new listings are down compared to the same time frame in 2022. In other words, we've been seeing year-over-year decreases of new listings going back to early July last year. But despite this, inventory levels have increased by 53% according to Realtor.com. So what this means, of course, is that inventory levels are much higher compared to 1 year ago, not due to an increase of new listings, because in fact, new listings have been decreasing by double digits in 34 out of the past 36 weeks. And in fact, last week, they decreased by 22%. The third consecutive week in which new listings decreased by more than 20%. Here's what we also know as well, because it's taking longer for houses to sell compared to last year for 35 consecutive weeks. In fact, last week, it's taking 18 days longer to sell a house compared to the same time frame in 2022. So in other words, it's taking nearly 3 weeks longer to sell a house right now. Now, having said that, this increase of days on the market hasn't changed at all over the past 5 weeks. Additionally, here's a new trend that's emerging as well, because the number of reduced price listings only increased by 88.7% last week. This is actually the first time it dipped below 100% over the past 13 weeks. Because the previous 12 weeks, we saw triple-digit increases in the number of reduced price listings. Also, this gain of nearly 89% is obviously still much higher compared to a year ago though, but this is actually the smallest increase going back to October last year. Now, I did some research on this. Why did the number of reduced price listings only increase by 89% where we saw triple-digit increases for quite some time before that? That could be due to one of two factors, or two factors here, as I note right here. This could be due to sellers listing their houses for prices more in line with current market conditions. In other words, we could be seeing home sellers who are more cognizant of the fact that the housing market has been slowing down, and therefore they're pricing their houses appropriately. So that could be reason number one. But reason number two could be due to the fact that inventory levels have been decreasing. What of course this means is that there's fewer options for home buyers, but there's also less competition for home sellers as well. Let me give you guys an example regarding that. Let's just say you guys list your house for sale, and then every single person on the street lists their home for sale that same day. Obviously, you have a lot of competition for your house, trying to get the eyes of home buyers on their house and trying to get offers, of course, right? But that's one. If you have a house that's listed for sale and there's no houses listed for sale in the entire neighborhood, then every single home buyer who's interested in buying a house in that neighborhood may be interested in placing an offer. Therefore, in that scenario, they're less likely to reduce their asking prices if there's not a lot of competition or not a lot of houses for sale in their neighborhood. I also want to share some interesting trends right now regarding the share of price drops according to altosresearch.com. So for the week ended March 31st, the share of price drops is at 30%. It really hasn't changed too much over the past several weeks here, but this is still much higher compared to 1 year ago when the rate was only 17.2%. Back in 2021, it was only 16%. And back in 2020, it was 25%. In pre-COVID, back in April of 2019, it was approximately 28%. So even though the share has been decreasing since mid-November last year, at the current levels right now, compared to the same time frame over the past several years, it's at least a 4-year high. All right, I know that was a lot to cover in today's video, so here's a summary for you guys if you guys are still watching. And of course, if you're still watching, then please hit the like button, of course, right? I also want to provide some predictions as well, given our current status of our housing market as well. So stay tuned for that. So number one, asking prices in the US only increased by 4.4% last week. That was the smallest increase going back to May of 2020. For comparison's sake, asking prices increased by 7.4% during that same week of 2019. That was for the week ended March 30th of 2019. And number two, housing inventory rose by 53% on a year-over-year basis last week, according to Realtor.com. However, though, it has been on a downward trend since November last year. It's more normal for inventory levels to fall in the winter months, but not normal for inventory to stagnate or not increase in March. Also, new listings have been decreasing by double digits for 34 out of the last 36 weeks. This continued lack of new listings is causing inventory levels to remain at historically low levels, even though inventory is much higher now compared to the past 2 years. And number three, average 30-year fixed rate mortgage rates are now around 6.2% according to the Mortgage News Daily as of April 6th this year. That's up from the 5.1% that we saw 1 year earlier, and also much higher though compared to the 3% rates we saw back in 2020 and of course 2021. Number four, we saw a huge increase in the number of reduced price listings over the past 5 months and triple-digit year-over-year gains in 19 out of the last 22 weeks. But the number of price reductions has fallen for 8 consecutive weeks. And on top of that, it dipped below 100% last week. Also, the share of price drops is at least a 4-year high during that same time frame. And number five, houses are taking longer to sell compared to the same week 1 year ago for 35 consecutive weeks. Again, though, this is a lagging indicator of our US housing market because it's based on closed home sales. So what are some potential huge changes ahead, given the fact that rates have increased so much compared to the past couple of years, yet mortgage rates have been decreasing for the past 1 month? Number one, average 30-year rates are about 1% higher compared to 1 year ago. That's approximately a 10% decrease in buyers' purchasing power. And number two, housing affordability is still an issue, especially compared to the past couple of years, but it has improved compared to 1 month ago. So for example, buyers looking to purchase a $450,000 home, putting 5% down today compared to about 1 month ago, are going to save around $270 per month to buy that same house today versus a month ago. This is because average rates have decreased from about 7.1% to approximately 6.2% as of April 6th this year. However, though, having said that, on a national level, home prices have been increasing since February this year. And number three, to combat inflation, the Fed has been raising the federal funds rate. How much the Fed decides to raise rates in the future, though, of course, depends on incoming inflation data. There's no guarantees about this, but I would imagine that inflation data is going to start to wind down in the months ahead due to rent growth softening and the significant rise of multifamily apartment buildings. So, for example, based on data from the U.S. Census Bureau for February, compared to February of 2022, we actually saw a 72% increase in the number of apartment buildings that have been completed. The reason why I mention this is that shelter costs account for approximately 43% of core CPI, or the Consumer Price Index, which of course is what the Fed uses to gauge inflation data. So we have a big increase in the supply of apartment buildings to rent out that could cause inflation data to wind down in the months ahead. Of course, time will tell. I'll definitely keep you posted because I am not a real estate market fortune teller. Number 4, we're starting to see some very early signs that home buying demand is on the rise. So for example, applications for home loans to buy houses have increased in 4 out of the last 5 weeks. However, though, we're still down by about 35% on a year-over-year basis. Also, new home sales rose slightly over the past 3 months. This is based on contracts being signed between buyers and home builders, as home builders entice buyers to place offers or to place deposits, given all the incentives they're offering right now. In addition, pending home sales for existing houses have increased for the past 3 months as well, according to data from the National Association of Realtors. However, this is not a repeat of 2021 or the first half of 2022. Demand overall has fallen greatly. So for example, pending home sales of existing houses decreased by 26% from February 2020 to February this year. And on top of that, they decreased by 19% from February 2019 to February this year as well. So in other words, this is not a repeat of the past couple of years where housing demand was absolutely skyrocketing. And number 5, sellers as well as home buyers have exited this housing market, leading to a dip in new listings as well as contracts being signed between buyers and sellers, especially compared to the past couple of years here. The lack of new supply or lack of new listings since last summer has led to inventory remaining at historically low levels. So for example, we're down about 44% compared to March of 2020, and we're down about 51% compared to March of 2019. If homeowners continue to be not interested in selling, that will limit housing inventory, which of course will put upward pressure on prices. Again though, if this continues to happen, this is not going to be a repeat of the first half of 2022 by any means. And number 6, I appreciate you. Thank you so much for watching today's video and hope you have an awesome day, and see you on the next one.